8 models, 1 stock, and $1,500 between them. Here's the week. On Monday, Micron closed above $1,000 a share. On Tuesday, it fell 7%. By Friday, it had crawled most of the way back to 967. It is still a fifth below its own June high. Quite weak, really. And two of the things you have probably read about it are wrong. Monday was not the first close above 1,000. It has done that 9 times this year, and it peaked at $1,213 in June. You will also see it called up 670%. That is the 1-year number. This year it is up about 240. Right. So somebody here is wrong. Last week, 5 famous investors had to file what they own, and they landed on 4 different sides of this one stock. So I rebuilt every model Wall Street and the great investors actually use. All of them run at Friday's price. By the end of this, you get one number and one word. One rule before the desk takes over. Every model here runs at Friday's closing price and nothing else. We are valuing the company you could buy tomorrow morning at the price you would actually pay, not the price a famous investor got in June. I will be back at the end with the number and the word.
Start with the filings because they are why this is a story at all. Big investors have to tell you what they own. 4 times a year they file a form called a 13F and it lists their American shares. Here is the catch. It covers what they held on the 30th of June and they get 45 days to send it. So everything read last week is about 7 weeks old. And on the same day, 4 of them said 4 different things. Coatue went from 166,000 shares to 3.1 million. That is 19 times bigger. Soros Fund Management multiplied its stake almost 8 times. David Tepper's Appaloosa cut his by 41%. And Stanley Druckenmiller's family office sold every share it had. Same stock, same quarter, same 3 months of news. Then there is a 5th one, and no filing anywhere will show you his. Michael Burry is short Micron. The Securities and Exchange Commission is blunt about this in its own rulebook. A 13F never includes short positions. You cannot even net one off against your long side. So the form everybody quotes is built to show you the buyers. A seller has to come out and say so himself. Burry did. On the 2nd of July, he put it in his own newsletter. Reports of that post have him short from $1,051. His argument was about the chart mostly. He said the stock sat further above its long-run average than at any point since 1984. He also pointed at Korea, which is pouring $500 billion into new chip plants. Micron fell 5% the next day. Now his record is a mixed thing. He was famously right about American housing in 2008. He was also short Tesla, and the filings show he closed it in the autumn of 2021 while the stock kept climbing. Early and Rung look identical for a very long time. That is the honest version of Michael Burry. So what is the company underneath all that? Micron makes memory. Every phone and every artificial intelligence server needs somewhere to put data while it works, and Micron makes the chips that hold it. The fastest kind is called high bandwidth memory. It is several memory chips stacked into a tower and wired straight through the middle. That is the part that sits beside the big AI processors. That stacked memory, the tower, is where the whole story lives. Micron already builds it for NVIDIA's next platform and for AMD's. The chief executive told investors the ramp is running twice as fast as the last generation. The company has shipped over $1 billion of it already. All of that is in writing in the prepared remarks. And the last quarter it reported was the biggest in the company's history. $41.5 billion of revenue in 3 months. That is 4.5 times what it sold in the same quarter a year before. It threw off $18 billion of spare cash. Then it turned round and spent $7 billion of that on new factories. But the number that stopped people was the gross margin, the share of each sales dollar left after you pay to make the thing. Micron kept 85 cents, 85. On the day it reported, CNBC called it the margin king of technology, ahead of NVIDIA and ahead of Meta. Here is what that actually means, though. That share of the dollar is the best this company has ever earned, and it is not close. In the boom of 2018, the best gross margin it managed was 61 cents. In 2022, a good year for memory, it was 45. So when you hear that memory has been up here before, check the record. The record says this is new ground. And then check what happened next. In its 2022 financial year, Micron sold $31 billion of chips at that 45% margin. 1 year later, revenue had halved. The margin was minus 9%. The company lost $5.8 billion. 1 year from a very good one to the worst loss it has ever posted. Right, so is it cheap or is it dear? There are only two other companies on Earth that do this at Micron's scale, and both of them are Korean. On the profits, all three have already made. SK Hynix costs about 8 times its earnings. Samsung costs about 13. Micron costs 22, nearly 3 times what the market pays for Hynix for the same product in the same shortage. So the ladder starts. The first model is the cash machine. You ask what a business hands its owners in spare cash over 10 years, then you ask what that stream is worth today. Micron's own filed accounts this year come to about $39 billion a year of it, so I gave this model the kindest assumption in the whole episode. That cash never falls, not once, not by $1. It still only says $439. Rung 2, pay Micron exactly what the market pays its two Korean rivals. On the earnings, all three have already booked, $446. Run the same sum on next year's expected profits instead, using their forward multiple, and it lands lower still. Both numbers go on the board because picking whichever one I preferred would be the whole trick. Rung 3, and on a company like this one, it is the rung that matters. Take this year's expected sales. Then instead of 85 cents in the dollar, pay it the 45 cents it earned in 2022. A good year. Hold every cost exactly where it is, which is generous because costs do not fall when memory prices do. That leaves about $28 a share. Hand it a full market multiple and you get 426. And then there is Wall Street, which disagrees with all three of those. 46 analysts cover this stock. The middle target among them is $1,550, not $400, $1,550. Their lowest is $361, their highest $2,200, which rather tells you they have no idea either. Now the great investors. Benjamin Graham wrote a screen in 1949. Take the earnings, take the book value, multiply them, take the square root. He built it for companies that make the same thing every year at roughly the same profit. Applied to Micron, it says $298, which honestly tells you more about Graham than it tells you about Micron. Then Peter Lynch, and this one is going to annoy people. Lynch's rule is that a fair multiple equals the growth rate. Micron's profit has compounded at about 25% a year since its last peak. So the rule says pay 25 times earnings, and that is more than the stock costs today. Lynch says it is cheap. His rule works fine. It was written for companies that grow. This one sells a commodity, so the growth here is really just the price of the commodity. The last one from the greats flips the question over. Stop asking what it is worth, ask what the price already assumes. At Friday's close, this stock assumes one thing: $39 billion a year of spare cash, growing 19% a year for 10 years, compounding, from the best margin the company has ever earned, in an industry that has halved its own revenue twice since 2018. Which brings us to the machine. Instead of predicting one future, it rolls the dice on 10,000 of them. Some where the shortage runs for years, some where it ends next spring, some where memory does what memory has always done. Every roll prices the stock. Stack 10,000 answers and you do not get a guess anymore. You get the shape of the future. And every die is a real number. How long the shortage lasts from what the company told investors to the contract prices that are already slowing. Where the cash settles and the bottom of that range sits below zero, because that is what 2023 looked like. What money costs, what Micron settles down into afterwards, then 5 named shocks, and 2 of those are good news. Here it is, 10,000 futures, 1 fixed seed, every input a public number. The middle answer is $286. 9 in every 10 land below Friday's close. And the widest 90% of them run from $59 all the way up to $1,262. 4 things would actually move that number, whether the peak quarter holds or 2023 happens again, the length of the shortage and whether it outlives 2027, then the new factories and whether they land on time, and the long bond, which hit a 20-year high the same day this stock fell 7%. Quick, honest ask. This show is brand new, and every one of these models takes days to build. If you want to see the next stock on this table, the subscribe button is how you vote. It genuinely decides whether this series continues. Now the stress test, and I want to be precise about what this is. It is a scenario. We borrowed this company's own 2 crashes and asked one question. If it happened again, where would the maths land? Applied to the June high, the 2018 path comes out at $692. So does the 2022 path. Both were 43%, one over 12 months and one over 7. And then there is the earnings floor. Pay that normal year profit the cheapest multiple in this peer group, which is simply what the market pays SK Hynix today. Add the cash sitting on the balance sheet. You get $236 a share. Friday's close was 4 times that.
So, 8 models, 1 company, 1 night. The lowest of them says $286. The highest says $1,830. That is the widest disagreement this table has ever produced. Take the 5 that vote, in the middle of them is $439. Friday's close was $967, so the models say overvalued, which happens to be Burry's side, and I want to be careful about that. So here is what would flip each of them. Coatue and Soros are wrong. The moment the contract price stops rising, that number has already gone from about 95% a quarter to about 15%. Burry is wrong if the shortage outlives 2027, the way Micron's chief executive says in writing that it will. And here is the part that stays with me. Druckenmiller sold every share, Tepper sold 4 in every 10, Coatue bought 19 times more, they read the same filings I did. None of this is financial advice. These are deep models built on public numbers, and every model on this board has been wrong before. That is exactly why we run all of them. Which stock goes on the table next? Tell me.